The manufacturing sector maintained its position as the highest contributor to Nigeria's value-added tax revenue in the first half of 2025, recording a total of 584.63 billion naira. This represents 26.6% of 2.197 trillion naira generated from local VAT within the period, underscoring the sector's continued importance to national revenue and overall economic activities. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okere. The latest figures from the National Bureau of Statistics shows that VAT collection in the first quarter of 2025 stood at 2.061 trillion naira. Of this amount, local VAT payments accounted for 1.102 trillion naira. Foreign VAT contributed 454.76 billion naira, while import VAT added 507.00 billion naira. In the second quarter of 2025, aggregate VAT remained stable at 2.059 trillion naira. The breakdown indicates 1.095 trillion naira was generated from local VAT, 459.95 billion naira from foreign VAT, and 508.55 billion naira from import VAT. This brought total non-import local VAT collection for the first half of the year to 2.197 trillion naira, excluding foreign and import VAT. %, that is 286.95 billion naira, followed by information and communication at 17.51%, which amounts to 192.97 billion naira, and mining and quarrying at 17.02% with 187.59 billion naira. The trend continued in the second quarter, with manufacturing posting an even stronger share of 27.19%, that is 297.68 billion naira. Information and communication contributed 20.76%, that is 227.22 billion naira, while mining and quarrying accounted for 15.04%, that is 164.70 billion naira. Despite the persistent microeconomic hurdles, including high inflation, volatility, exchange rate, inadequate power supply, weak consumer spending, and rising production costs, the manufacturing sector continues to play a stabilizing role in economic structure. Its steady VAT contributions indicate strong transitional activities, even as the industry battles reduced competitiveness and unsold inventory pressures. The dominance of the manufacturing sector in VAT contributions reflects both scale and breadth of its operation across the economy. However, the data also highlights an economy heavily reliant on sector that is struggling to stay competitive without structural reform, especially in power, logistic, and forex stability. The sector contribution risk plating potential, slowing overall revenue growth in the long term. Nigerian insurance industry is entering a new phase of capital mobilization as 5 underwriters have formally announced plans to raise approximately 75 billion naira in new capital to meet the revised minimum capital requirement under the Nigerian Insurance Industry Reform Act, NIRA 2025. Corporate filing on the Nigerian exchange shows that Sunu Assurance, Sovereign Trust Insurance, Linkage Assurance, Guinea Insurance, and Veritas Capital's Insurance have secured board approvals and are now seeking shareholders' consent to proceed with their fundraising strategies. These strategies include rights issues, public offers, private placement, and in some cases, merger arrangements approved by the board. level. The NIRA 2025 regime significantly raises the industry capital threshold, saying non-life insurance must now hold a minimum capital of 15 billion naira. Life insurance companies are now required to maintain at least 10 billion naira. Reinsurance firm must increase their capital base to 35 billion naira. Guinea Insurance has scheduled an extraordinary general meeting to seek approval to raise up to 15 billion naira. Part of its resolutions includes increasing its issued share capital from 4 billion naira to 19 billion naira and raising new equity to meet statutory capital obligation and support growth plans. Sovereign Trust Insurance, having obtained shareholders' approval to raise 20 billion naira, is commencing the process with a 5 billion naira rights issue, expected to be concluded in the first quarter of 2026 as part of its phased recapitalization approach. Sunu Assurance Nigerian PLC has also received shareholders' endorsement to raise up to 9 billion naira. The board now has full authority to source capital through any mix of rights issues, private placements, or public offers, and to restructure its share capital in line with regulatory requirements. The Sunu Group had earlier reaffirmed a commitment to strengthening its Nigerian operation. Linkage Assurance secured approval of its recent EGM to raise 16 billion naira through any combination of fundraising instruments. This includes approval to increase its share capital once regulatory clearance are obtained. Veritas Capital's Insurance has obtained shareholders' consent to raise about 15 billion naira via private placement, along approval for a corresponding increase in share capital. Beyond the highlighted 5 insurers, other operators such as Lasco Assurance have already moved ahead, raising 11.1 billion naira, while Regents Alliance has received shareholders backing for capital restructuring through various instruments. The National Insurance Commission has tightened oversight to ensure credibility and compliance. The regulator has partnered with 4 big audit firms, including EY, to independently verify capital compliance. Under the new rule, all funds raised for recapitalization must be domiciled in dedicated escrow accounts with the Central Bank of Nigeria, enhancing governance and safeguarding policyholders' funds. NICOM has also clarified that only admissible assets, those with the perfected titles and full ownership, will account towards meeting the minimum capital requirement. Any company unable to meet the MCR within the stipulated time faces this possibility of merger, acquisition, or regulatory intervention, including liquidation. According to the regulators, industry response has been positive, with about 18 insurers indicating readiness for capital verification, while many operators rush to raise new funds. Cornerstone Insurance PLC says it's already fully capitalized and does not require additional fundraising. Its latest financial shows a share capital of 9.08 billion naira and a shareholder fund exceeding 67 billion naira, backing it with claims of strong solvency under the new regime. Industry analysts note that even before the NIRA 2025 was signed, Augusto & Co. had projected that insurers will inject over 600 billion naira into the sector to meet the new standards. The recapitalization waves represent one of the most decisive reforms in Nigerian insurance industry in 2 decades, while immediate scramble for fresh capital signals pressure on insurance. The long-term impact could be transformative. Higher capital buffer will strengthen underwriting capacity, improve claims settlement, and restore public confidence in industry along perceived as weak. However, small firms may struggle to survive independently, leading to a likely phase of industry consolidation. Overall, the recapitalization exercise is positioning the insurance sector for increased competitiveness, but success will depend on the strict regulatory enforcement and the ability of insurers to deploy capital effectively. The Nigerian National Petroleum Company Limited is carrying crude-backed loan obligation estimated at 8.07 trillion naira based on its 2024 financial statement and capital commitment report. These liabilities are tied to multiple forward sales and project financing deals that require large volume of crude oil and gas deliveries over the years. Many of the loans were unused to refinance earlier debt, fund refinery rehabilitation, support cash flow, and meet government revenue needs as the crude production declined and fiscal pressure increased. One of the major exposure is the Eagle Export Funding Structure, although two earlier tranches with $935 million and $635 million were fully repaid by September 2023. A third tranche of $900 million remain outstanding. The facility, backed by 21,000 barrels per day, had an unpaid balance of 1.1 trillion naira as of December 2024. With a final maturity set for 2028, another significant liability comes from an incremental gas supply financing agreement with Nigerian LNG Limited, under which LNG provides 772 billion naira upfront. By the end of 2024, 535 billion naira worth of gas had been delivered and 312 billion naira recovered, leaving an outstanding of 472 billion naira, including financing charges. The refinery rehabilitation program is another major source of exposure. Project Yield, which financed the Port Harcourt refinery upgrade, recorded 1.4 trillion naira outstanding at the end of 2024. The deal is secured by refined product equivalent supply of 67,000 barrels per day, with repayments beginning in June 2025. Project Leopard, another crude-backed arrangement, carried 1.3 trillion naira outstanding, tied to the delivery of 35 barrels per day, with repayments also scheduled to begin in the mid-2025. The largest liability is the Project Gazelle, used to finance advanced tax and royalty payments on PSC assets. NNPCL had drawn 4.9 trillion naira out of 5.1 trillion naira facility, delivering crude worth 991 billion naira and leaving an outstanding of 3.8 trillion naira. The agreement commits 90,000 barrels per day until full repayment. Nigeria's oil earnings continue to struggle. In 2024, gross profits from crude and gas sales fell by 824.66 billion naira, dropping to 1.08 trillion naira, a 43% decline from 2023 and far below the budget target. Despite a modest recovery in the production to 1.43 million barrels per day, output still lags the fiscal benchmark of 1.78 million barrels per day due to infrastructure challenges, theft, and underinvestments. Experts warn that crude for cash agreements and long-term forward sales have tied up substantial volume of Nigeria's crude, limiting fresh revenue inflows. Analysts argue that past administration committed large position of future production to debt arrangements, and many of those obligations continue to impact current earnings. NNPCL crude-backed loan structure reveals a heavy dependence on forward sales to manage cash flow and finance critical projects. While these deals provide immediate liquidity, they significantly constrain future revenues, especially in period of low production. The concentration of the repayment in the next few years poses risk to the company's financing and the government's fiscal stability. Improved transparency and tighter oversight. A clear strategy for reduced crude secured borrowing will be essential to restoring confidence in Nigerian oil revenue system. The Dangote Group and the Kano State government are deepening collaboration to expand economic activities and accelerate social development initiatives across the state. The renewed partnership comes as thousands of visitors troop to the company's pavilion at the 46th Kano International Trade Fair, where Dangote is showcasing a wide range of innovative consumers and industrial products. Kano State Commissioner for Investment and Commerce, Shehu Wada Shagagi, says the state is intensifying its engagement with Dangote Group, strengthening existing ties while exploring new areas of cooperation. According to him, aligned government policies with the capacity of a major private sector player like Dangote is expected to enhance industrial output, stimulate trade, and create broader opportunities for businesses operating within the state. He noted that the administration of Governor Abba Kabiru Yusuf has prioritized creating a business-friendly environment to attract investment and support enterprise growth. As one of the principal sponsors of the 2025 fair, the Dangote Group affirmed that a key component of its partnership with Kano is the development of a world-class rice milling complex. The project aims to boost domestic rice production, improve value addition, and introduce advanced processing system capable of meeting both local and international standards. Beyond industrial collaboration, the group, through Aliko Dangote Foundation, continues to execute extensive social programs in Kano. This intervention targets food security, nutrition education, health care, and economic empowerment for vulnerable groups. Large-scale food distribution exercise include 120 bags of rice and thousands of Ramadan meals during the 2024-2025 period have provided relief to low-income households. The foundation has also supported the state's effort to combat child malnutrition through the supply of ready-to-use therapeutic food and community health awareness initiative. In the economic empowerment space, micro-giant programs have enabled women and disadvantaged groups to establish or expand small businesses, helping to reduce poverty across several communities. The group contribution to education include funding a modern business school for Bayero University, Kano, and supporting infrastructure upgrades at the Kano State University of Science and Technology. Woodley, in the health sector, the group has contributed in the development of the modern surgical and diagnostic center at Muritala Mohammed Specialist Hospital. As part of its evolving product strategy, Dangote will unveil new 100 grams and 25 kilograms cement packaging size during its special day at the fair. The theme of the fair, Empowering SMEs for Sustainable Growth, aligns with the company's focus on driving innovation and strengthening small businesses. All right, let's take a quick short break now. We will be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point, where we extract the Nigerian economy and the government policies. The Naira strengthened over the past week, appreciating to 1,446.7 Naira per dollar at the official market, a 0.69% gain from the previous week rate at 1,456 Naira to $1. This improvement followed a period of heightened volatility with currency trading below 1,450 naira to a dollar for most of the week. At the parallel markets, the naira also recorded a mild improvement, closing at 1,476 naira to a dollar. At the 60th annual bankers dinner in Lagos, CBN Governor Olayemi Cardoso reported that Nigeria recorded $20.98 billion in foreign capital inflow within the first 10 months of 2025. This represents a 70% increase over total inflow in 2024 and a significant leap compared with the $3.9 billion recorded in 2023, an indication of rising investors' confidence. Market reports shows that liquidity condition improved, bid-offer spread narrowed, and trading activities became more balanced during the week. Analysts noted that foreign portfolio investors were active sellers of dollar position, boosting FX supply and easing demand pressures. As a result, the naira continued to firm up across the market segments. Looking ahead, market watchers expect the naira to face mild pressure due to persistent structural challenges and consistent FX demand. However, rising external reserve and expected month-end inflow are likely to offer short-term support. A calmer post-MPC environment is also expected to improve clarity and sustain market-driven price discovery. Governor Cardoso highlighted ongoing reform in the foreign exchange market, including the unification of the exchange rate windows, the clearance of the historic FX backlog, and the introduction of a regulatory code promoting transparency and sound market practice. He added that the deployment of an electronic FX management system has improved real-time visibility and pricing efficiency. This reform has helped narrow the gap between the official and parallel market rates to less than 2%, down from 60% previously. He maintained that the combination of the reforms, improved governance, and clearer rules has restored credibility to the FX market and contributed to the sharp rise in foreign capital inflow recorded so far in 2025. Before we call it a wrap, let's take a quick look at the stock market. The Nigerian exchange ended the week on a negative note as all share index declined by 0.14% to close at 143,520.53 points. Market capitalization also fell to 91.286 trillion naira, down from 91.415 trillion naira in the previous week. The downturn reflects weakened investor sentiment and continued rounds of profits taken across several major equity. Despite the overall decline, not all segments of the market moved in the same direction. While the most indices closed lower, market activities increased during the week, with turnover rising to 4.14 billion, shares valued at 115.889 billion naira in 1,351 deals. This surpassed the previous week 2.668 billion shares worth 106.264 deals. All right, this is where we'll call it a wrap on Business Point today. Join me again tomorrow on Global Television, channel 365, and on Star Time, channel 276. To stay connected, kindly follow us on all our social media platforms using @GlobalTVNG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.